Hi, this is Randy Finney with Right Side of the Chart. Today is Friday, July 28th, 2017. And as we head into the last few hours of trading today, I wanted to do what I've done in recent weeks, and that's an update on the sectors that stand out to me as the most compelling as far as swing trading opportunities, whether it's on the long or the short side. Yesterday I put up a post on XBI, and a few days before that I put up a chart on Amgen. XBI is one of several biotech ETFs, but it's probably one of the more actively traded, and it tracks the same index, the Spider's S&P Biotech Index, as does LABU and LABD. And I know from the trading room, a lot of you guys like to trade those leveraged biotech ETFs. So here's the holdings, and I like to sort my watch list. These are all the holdings of that XBI. And I like to sort them by market cap. And as I mentioned the other day before Amgen reported, it's the 800-pound gorilla in the biotech sector. You can see here that it has a market cap of 128 billion. So that makes it the largest, at least the largest holding here in XBI. And then there's a couple others that are up around the $100 billion mark. We'll just look at a few here. But here's what's happened in the last few days. And again, I made a brief update on this on a static post yesterday, but I wanted to share my thoughts here. A lot of trend lines, and each of these I try to color code them so you can see. For example, here's a rising wedge with a divergent high, and there's a breakdown and impulsive move. This helps illustrate the technical analysis does work a lot. You had a falling wedge with a breakout and then a move up. That little falling wedge, it was small in scope, but it was within this larger rising wedge pattern. We had a breakdown, back test, another move down. That rising wedge didn't result in a whole lot of corrective action. It was more in time than in price, and then another thrust up. So now let's focus on what's happened most recently. We've had a pretty decent uptrend. We had a couple things happen. This sharp move up had the appearance of a flagpole, and this looked like a pennant type continuation pattern, and we had a breakout. That breakout has failed. So number one, that's a bearish technical event, because when you see a breakout of a flag type pattern, any type of continuation pattern, it should be impulsive, just as the move leading up to the formation of that flag or that consolidation was. And we started to move out impulsively, but since had an abrupt change. So that is, bearish technical number event one. I want to say I'm not fully bearish. I'm not ready to short the sector just yet, but I may be soon. I haven't seen really any reason to go long or short in a while. I was a little suspicious of that breakout, and I'll tell you why I was suspicious. I talk about this often. I don't mind chasing. In fact, I love chasing breakouts, but I don't chase breakouts with a divergent high. So the bigger picture here is you had an uptrend line. These two lines formed a bearish rising wedge, and that wedge was confirmed with negative divergence. So in other words, once XBI broke out of that pennant type pattern that I'm sure a lot of traders are watching and positioned long on, it did so on a divergent high, and divergent highs have a much higher likelihood of failing than breakouts that occur without a divergent high. So that's that. Fast forward to today, you can look and see we have a little kickback rally, about 1%. That's just a run-of-the-mill move. In fact, it's a below average probably, or about an average move in the biotechs. These guys can run, much more than 1%, I think 2-3% a day, sometimes more even. So it's not really a big move. It's just a kickback rally, and it's also to be expected. Yesterday I posted on the update on Amgen. This was the chart. Okay, heading into earnings, we had this uptrend line as well as a triple top high. I have to go back here to this 2-day chart so you can see several reactions. You see a reaction here, 1, 2, 3. So 3 failures at that level so far, and an impulsive move down. So as of now, that's a triple top, although the base really of that pattern would be much lower. So there's nothing to say at this point yet that that we have to continue lower. However, that triple top pattern or that most recent high, I should be a little clear. We had a reaction intraday there and then fell back below. So technically speaking, we didn't make a newer high over this previous reaction high, but we about matched it. And if so, that gives us negative divergence here. So if you want to be a little bit liberal with that, you can see that the bottom line, the PPO and the RSI, whether or not we poked out, or in this case we didn't, you can see, regardless, they were lagging, and that's divergence, and that's a sign of non-confirmation. So maybe the biotechs, or in this case Amgen, needs to consolidate here and build up some energy to make a sustained breakout, and that's a possibility. So if you're bullish on biotechs, just watch that level. Ideally, you want to see some consolidation, work off, get rid of these divergences, and then maybe a convincing breakout, convincing on increased volume, impulsive price action, etc. As of now, we can't say that. We can only look at the near term, what's happened in the near term. And that's a failure there on Amgen, again, the largest component there of XBI. Impulsive breakdown below that uptrend line pretty well on a very steep uptrend line. Broke down. You can see 1-2 days of selling, and then, as I pointed out yesterday, we hit the first support level, and this is a very, very solid support level. So I would have been surprised not to see a reaction there. You can see reactions back here. You can see a big gap here. That's a very significant gap. Gaps are like magnets as far as support goes. So that gap, as you can see, as time went on, that gap acted as support here, the bottom of that gap I'm referring to, and those are recent reactions, so therefore that is, on a scale 1 to 5, that's close to a 5 for support level. And being as oversold as we were, that's a pretty sharp move down in just a couple days. A reaction there is, again, as I said, was expected. However, you can see these divergences here, and what I'm watching for, if that level goes, you can see each of these are additional support / price targets. Each one may produce a reaction. I would expect a reaction, but it doesn't have to happen. But those are the levels on Amgen to watch. And just to kind of now go through the sector, because sometimes you can see a market leader break down one of the leading stocks, but the rest of the sector is doing okay because that one company just happens to have its own unique fundamental issues. Here's the next one in line, ABBV, ABBV. There's a well-defined uptrend line, a divergent high. You can see everything I like to see, on a topping pattern, negative divergence. Confirmed there. We had a divergent high back here. I might not have had all the lines drawn on this chart. You can see the negative divergence, divergent high right there. And what did that do? That led to a big drop in the stock. I'll tell you how much that was at that point in time. The stock fell, about 18%. So we have a divergent high here, not as large in scope. However, there's an important uptrend line to watch. We failed this recent breakout to new highs here, and so that one, doesn't look so hot, although we could have another reaction off that trend line. Remember, support is support until and unless broken. So right now we have Amgen bouncing off support. We have ABBV virtually bouncing off support today. Missed it by just a few cents there. Here's CELG, another one of the huge biotech companies. Quite a bit on this chart, but what I would focus on is this divergent high. You can see prices making a higher high there against the indicators RSI, PPO making lower highs, and we have even a smaller divergence here. So that's the bigger picture, and then this uptrend line, which would probably trigger our sell signal and bring us back down to this level. This is pretty decent support zone, these two lines here. Within that, there's a few other things to note. We had a very impulsive move here, and then consolidation, which is a bull flag. You can see the bull flag action, bull flag pattern, I should say. A sharp move up, bull flag consolidation, and then a breakout, but yet another failed breakout. And again, as I often say, fewer things in trading are more bearish than a failed long side breakout. So you see the impulsive selling so far, the failure to follow through on that breakout of that bull flag pattern. And now we have this minor uptrend line where we're testing. So it's another big biotech at support. Bottom line, guys, we'll probably know next week, within the next week or two. If we smash right through all these support levels, I'm just going over those top three. I'll touch on Gilead because I've been bullish on that one for a while and long that one. That one was one of my favorites because we had a nice, this one had its own unique, let's say, bear market within, while the rest of most of the other biotechs were rallying, but that one had fallen down to long term. It was weekly support, I pointed out, bullish falling wedge pattern, downtrend line breakout. and it rallied. It's had a nice rally since then. I've been highlighting that one, I think, since February back at this level. So it's already rallied about 17%, right up to resistance and downtrend lines. So I booked profits on that one. I see right now a potential bearish rising wedge pattern with divergent high, and at the very least, I expect a reaction here as we come up to these intersecting resistance levels. You have price resistance. You can see all the reactions right here around the 76.50 level and that longer term downtrend line that comes into play. I see the risk to reward right now is not very favorable, even though that was long term the stock may have put in a bottom, but at the very least a pullback, maybe recycling at 70, 80 around there, a little bit above that level, positioning for a potential breakout and or add if we get that breakout. But again, it depends on how the sector is doing at the time. So I'll leave it there. That's the biotech sector, and I'll try to touch on some other ones again, both bullish and bearish, that I'm watching at this point in time. So this one needs a little bit more work to firm up the bearish case, as well as to firm up the bullish case. We're sort of at an important technical juncture, if you will. So let's watch this one in the next week or two, and if we start seeing breakdowns there, I can put some short trade ideas up. Of course, as I do these videos, if you see a stock you like, I've showed you levels that are key levels to watch. You can see the support levels and resistance levels all drawn on my charts. Those are potential targets. So, go ahead if you like the stock and make the trade. I cover so many stocks and sectors in here, I can't possibly put them all up, not even a small fraction, as official trade ideas. So the theme this year has been the unofficial trade ideas have, for the most part, done much better than a lot of the official trade ideas. Solar stocks, again, there's not a well, TAN, I already went over that, TAN ETF. I'll cover the solars in another video. Cannabis stocks, we don't have an index to track those, so I have my own index that I built in my watch list that I follow, and those have been doing very well. Once again, we're in an uptrend in a lot of those stocks, so I'll touch on those again today in another video as well. This has been Randy Finney with Right Side of the Chart.